At 6:49 in the morning on Monday, March the 23rd, something happened in the oil futures market that a trader with 25 years of experience called really abnormal. In the space of 27 seconds, 6,200 contracts for Brent and West Texas Intermediate crude oil changed hands on the CME exchange. The notional value of those trades was $580 million. At the same moment, someone bought $1.5 billion worth of S&P 500 futures. The total combined position was approximately $2 billion placed in a window of less than 2 minutes on a Monday morning with no scheduled economic data, no Federal Reserve speakers, and no publicly available news to justify any of it. 15 minutes later, at 7:05 in the morning, Donald Trump posted on Truth Social that the United States had been engaged in productive conversations with Iran and was halting planned strikes on Iranian power plants. Oil dropped nearly 6% instantly. The Dow surged over 1,000 points. And whoever placed those trades made an enormous amount of money in under 15 minutes. The question every regulator, every senator, and every American who has been paying more at the gas pump for 26 days of war should be asking is the same question. Who knew? And how did they know before Trump posted? Let us start with the specific numbers because they are the foundation of everything that follows. Bloomberg compiled the exchange data and the findings are precise. In the 2-minute window from 6:49 to 6:51 in the morning New York time, 6 million barrels worth of oil futures contracts were sold. That is 8.5 times the average volume for that same time window over the previous 5 trading days. The average for a normal early Monday morning at that hour is approximately 700 lots. 6,200 lots changed hands in 27 seconds. A trader at a major hedge fund told the Financial Times, and this quote is exact, "My gut from watching markets for the last 25 years is this is really abnormal." He added, "It is Monday morning. There is no important data today. There are no Fed speakers you would want to front run. It is an unusually large trade for a day with no event risk. Somebody just got a lot richer." At roughly the same moment, S&P 500 E-mini futures recorded a sharp isolated jump in volume, representing more than $2 billion in notional value. That was a sharp spike against an otherwise subdued pre-market session. Senator Chris Murphy of Connecticut saw the numbers and posted publicly, $1.5 billion in S&P 500 futures bought, while $192 million in oil futures was sold. 5 minutes before Trump's post. He added 3 words that have not been answered by anyone in the administration. Who was it? Here is why those 3 words matter more than anything else in this story, and we are going to come back to them. But first, you need to understand the specific legal framework that makes what happened on Monday morning either a coincidence or a federal crime. Insider trading in futures markets is illegal under the Commodity Exchange Act when a person trades on material non-public information. A presidential announcement that oil prices will fall because the United States is pausing, strikes on Iran's energy infrastructure is material information. It moves markets by measurable billions of dollars within minutes. It was not public until 7:05 in the morning. Anyone who knew that announcement was coming before it was posted and traded on that knowledge committed a federal crime. The question is not whether the legal framework applies. The question is whether anyone with advanced knowledge of Trump's post placed those trades. And the answer to that question requires knowing who was in the room. Paul Krugman, who won the Nobel Prize in Economics, went further than any other commentator this week. In a Substack post that has been widely circulated, he used a word that most analysts have been careful to avoid. He wrote that trading on national security information is not just illegal insider trading. He wrote that we have another word for situations in which people with access to confidential information regarding national security exploit that information for profit. That word is treason. Krugman then raised a question that is more disturbing than the trading itself. He asked whether the possibility of insider profits may be influencing the policy decisions themselves. Whether decisions about war and peace are in part serving the cause of market manipulation rather than the national interest. That is not a fringe question from a partisan commentator. That is a Nobel laureate asking whether someone around the President of the United States is using a war to make money. And he said if you dismiss this as unthinkable, you just have not been paying attention. Now here is the context that makes Krugman's question harder to dismiss than the White House would like. Stay with me. This was not the first time. Axios reported that the pattern of suspicious trading before major Trump announcements related to this conflict has become impossible to ignore. Before the Venezuela military action earlier this year, an unusual surge of over 150 polymarket accounts placed hundreds of bets predicting the U.S. strikes. On the prediction market platform, Polymarket, The Guardian reported that bets totaling $70,000 made by 8 accounts on a U.S.-Iran ceasefire showed signs of potential insider trading in the days before Monday's announcement. Polymarket and Kalshi both announced on Monday that they will implement new insider trading restrictions, specifically blocking politicians, athletes, and other relevant people from trading in politics and sports markets. That these platforms felt the need to announce new restrictions on the same day the oil market anomaly was reported is itself a data point. And here is the detail buried in the Axios investigation that connects the trading question to the people closest to the decision-making. Jared Kushner, Trump's son-in-law, is one of the 2 principal Iran envoys. He was in the room for the negotiations. He was present for the discussions that preceded Trump's Monday Morning Post. He is also simultaneously seeking to raise billions of dollars for his private equity fund from Persian Gulf governments who are directly entangled in this war. Gulf states whose energy revenues, diplomatic relationships, and economic stability are all affected by the outcome of negotiations that Kushner is personally conducting. The White House counsel said the president has no involvement in business deals that would implicate his constitutional responsibilities. The statement said nothing about Kushner. Trump's sons Eric and Donald Jr. have invested in drone companies competing for Pentagon contracts during the same war those drones are being evaluated for. These are not anonymous traders. These are named people in the building where the announcement originated. The White House spokesperson Kush Desai said in a statement that the White House does not tolerate any administration official illegally profiteering off of insider knowledge, and that any implication that officials are engaged in such activity without evidence is baseless and irresponsible reporting. That statement does not address the specific $2 billion trading anomaly. It does not say who placed those trades. It does not say whether any investigation has been opened. And it does not explain why 6,200 oil futures contracts changed hands in 27 seconds, 15 minutes before a market. Moving presidential announcement on a morning with no other scheduled news. Here is the detail that most coverage has not adequately addressed. Even if the trades were not placed by someone inside the White House, the anomaly itself is a strategic vulnerability of a kind that Krugman specifically identified. Trading on classified national security information effectively broadcasts government plans to anyone sophisticated enough to watch the order flow. A foreign intelligence service monitoring U.S. futures markets in real time would have seen the same spike that Bloomberg and the Financial Times identified. They would have drawn the same conclusion that professional traders drew, that something significant was about to be announced. And they would have had 15 minutes to act on that inference before the American public knew anything. Insider trading during a war is not just corruption. It is a national security problem. The enforcement picture makes this harder, not easier, to investigate. Axios reported that the Justice Department's Public Integrity Section, which was created specifically after Watergate to prosecute corrupt officials, has been reduced from 36 lawyers to 2. It has been stripped of authority to file new cases. Reuters, citing 3 anonymous officials, reported that the SEC's top enforcement official resigned last week after agency leaders blocked her from aggressively pursuing cases touching Trump's circle. A White House spokesperson said the SEC applies securities laws faithfully in every case. The 2 enforcement agencies most capable of investigating the Monday morning trades are both operating at reduced capacity or under new constraints at the moment when the most significant trading anomaly of this administration's time in office has just been identified. Senator Murphy called it mind-blowing corruption. Iran's parliament speaker Ghalibaf called it fake news used to manipulate financial and oil markets. The White House called it baseless. A 25-year market veteran called it really abnormal. A Nobel laureate called it treason. None of those framings is the same as proof. Trading anomalies can have innocent explanations. Algorithms can fire on pattern triggers. Large positions can reflect sophisticated but legal speculation on publicly observable facts. Stephen Pipgrass, a partner specializing in futures trading at the law firm Troutman Pepper Locke, told CBS News that the massive spike in volume right before that post is certainly enough to raise eyebrows and enough to launch an investigation into what was behind it. An investigation has not been publicly announced. Here is what the expectations were before this week and what the reality of the trading data has now placed on the table. The expectation was that presidential announcements about war and peace are made based purely on strategic and diplomatic calculations with no financial dimension. The reality is that a $2 billion trading position was established 15 minutes before a presidential announcement that moved markets by measurable billions, on a morning with no other catalyst, by unknown parties whose identity has not been disclosed and whose trades have not been investigated publicly. The expectation was that the enforcement apparatus designed to investigate exactly this kind of anomaly was functioning and independent. The reality is that the Justice Department's Public Integrity Section has been reduced from 36 lawyers to 2, and the SEC's top enforcement official resigned last week after being blocked from pursuing certain cases. The expectation was that if someone close to the president had traded on classified information about a wartime announcement, the White House would support a full and transparent investigation. The reality is that the White House issued a statement saying the implication is baseless and has said nothing further. The expectation was that the trading anomaly was an isolated incident. The reality is that Axios documented a pattern of suspicious trading before multiple major Trump announcements going back to the Venezuela action earlier this year. Senator Murphy asked who was it. That question has not been answered. No investigation has been publicly announced. The $2 billion position was placed. The announcement came. The profits were made. And the people most capable of finding out who did it are operating with fewer resources than at any point in the last 50 years. If you think this should be investigated, say so in the comments. If you think there is an innocent explanation, make that case. This is the conversation that matters for Americans right now. Not just the war, what is happening around the war. This is Global Conflicts Dispatch. Subscribe. Back tomorrow.